Hey guys, so I wanted to start this video off by saying I'm going to be going over a very rudimentary concept that's going to stay with you all the way into the advanced and intermediate level of your trading. I would say this is pretty much one of the most important concepts aligned with the time frame alignment video I made. This is going to be part of my beginner um, series. So if you're new or even if you're experienced in the game, market structure, especially market structure when it comes to intraday trading, you will have to master that. And I will show you a simplistic way to go about it day by day. So let's start off here. Let's go to my 5 minute here. So I trade from 9:30 to 11, right? So I'm particularly cautious about the structure from around 6 a.m. to NY open until the end of NY. So what I'll do is I'll just start marking structure, right? Let's zoom in here. So we have a low here, a high here, a low here, a high here, right? And what do we do here? We break this low. We also have a change in state of delivery from that change in state of delivery video, right? So now I've confirmed my market structure shift. I've had a change in state of delivery. And what are we having here? A low, a lower high, a lower low, a lower high. Everything's continuing in this general trend, right? Now let's go into our 15 minute. Is it even clear? Yes, it's clear. Why is this a low? Because there's a high low to our left and a higher low to our right, right? This is our 15-minute high. Why is it a high? It's a lower high to the left and a lower high to the right. You start seeing structure becoming a little bit clearer. A low, high, a low, a high. Let's put the line chart on and see what we see. Is it clearer now? Right? So when you're trying to locate structure, you can also use that line chart as well if you are um, basically not that, advanced yet. So let's move on to the next example here. So again, because I'm focused on a 9:30 open, I'm only worried about structure that's from 7 a.m. to 9:30 open till the end of New York session, right? So what am I marking here? A low, a higher high, a low, a high, a lower low, which breaks this low, a lower high, a lower low, then boom, this high breaks all these previous highs here. There's a low, this high. What do? We break the low of the higher high. We cause a lower low. And what do we have here? A lower high, lower low, lower high, lower low, lower high. This confirms our change in state of delivery and it also confirms our bearish bias. Now, for example, if we had seen this happen, right? Then this is what would have happened. We would have had a bullish run to the upside, but that's not what happened, is it? Right? What happened is created a high, a low, a lower high, and we kept it moving, right? So even if you just trace price in this way, you'll start to see it starts to make a little bit of sense, right? Let's move on to the next example. Okay, here. Again, I'm worried about New York Open. So we start at 7 a.m. From 7 a.m., we have a low, a high, a low, a higher high, a higher low, a higher high. Do you see how it's starting to sync up with the change in state of delivery as well? All right. A higher low, a higher high, a higher low, a higher high. And we just keep continuing for the rest of the session. It might seem like something that's extremely like straightforward, but at the same time, you need to have a good grasp of this. If you need to focus on structure, a more higher time frame perspective, use the 15-minute while you're holding your trade and take a look at the line chart, right? Just take a look at the line chart. Boom. Let's go to the next and the last example, most likely right here, if I assume. All right. So in this day, I didn't find any trades during my time interval, which is 9:30 to 11. But I'm sure, if I was really staying in the charts for longer than I intended, obviously, just by using structure, we could have found a trade and taken advantage of these sells here. So if we were to take a buy here, what we have liked to see is this low here, this higher high, this higher low, this higher high. And when this low would have broken this low, we would have liked to see a high and then a continuation lower. But what happened was instead of seeing this high broken, which is what I would like to see, it got broken here, but we couldn't continue higher, right? Which is what you want to see with bullish order flow. So what happened is this was a liquidity sweep, right? And you start seeing structure in this way where it's like, okay, cool. What do I expect to happen next? Just frame it out. Low, high, low, higher, high. Now, if we're going to be bearish, we need to break this low and we need to create a lower high. What do you start seeing happen? Right? Right? Seems pretty simple, but at the same time, this will be the most powerful thing for a beginner to learn, as well as an intermediate level trader. If you guys want to get access to my private group that I'm going to be closing off at the end of this month, I will leave the link in the description. I hope you guys have a blessed rest of your day. And please, please look over this video a few times. Look over the concepts I'm talking about, the change in state of delivery. Start combining them, right? This is gonna be this is gonna be the first video of my beginner level course. Well, for YouTube, the free course I'll be creating for YouTube. We're gonna talk about market structure. We're gonna talk about PD arrays, everything you need to know, but bit by bit, step by step, right? Have a great rest of your day, guys. I hope you have a beautiful rest of your week and a beautiful trading week. All right, that's it for today.